Okay, let's unpack this. Today, we're doing a deep dive into a really interesting strategic roadmap. It's for this tfomSEWAca protocol. We're looking at how they plan to handle and maybe even, benefit from all the turbulence in the crypto market right now.
Yeah, and we've got some good source material here, building a lot on Pal J's analysis of the recent chaos.
Right.
What Pal J really highlighted and what stands out is this kind of paradox in the market, this contradictory volatility.
Contradictory how?
Well, you look at the big picture, the macro stuff, whispers of Fed rate cuts, maybe some movement on U.S.-China trade. Fundamentally, that should be pretty bullish, right?
Yeah, you'd think so.
Yeah.
But it feels like that's just getting steamrolled.
Exactly. Steamrolled by these massive short-term liquidity shocks. I mean, everyone saw the headlines.
Oh, yeah. That huge $19.5 billion liquidation event.
Right. And then, boom, right after that sort of narrative-driven thing, the Trump-China crash, they called it, sending prices tumbling again.
So it's just confusing signals everywhere.
It is. But the core idea, the thesis in this strategic report we're looking at, it's pretty clear, actually.
Right.
It's saying these shocks, they aren't like the system collapsing. It's more of a market reset.
A reset. To do what?
To basically flesh out all the excessive leverage, all the froth, and what the document pretty bluntly calls the weak hands.
Huh. So, okay, if volatility and these resets are just part of the game now, the strategy has to be different.
That's the pivot. The protocol's whole imperative seems to be, forget speculative trading, build something where only real conviction pays off.
But how do you actually do that? I mean, how do you structurally cut yourself off from all that crypto chaos?
Well, that seems to be baked into the architecture, the design. They're trying to sidestep the usual crypto speculation by tying its value to something else entirely.
Something internal.
Yeah, a proprietary mechanism they've developed. It's called the Eternal Value Protocol, the EVP.
EVP, okay, Eternal Value Protocol. So that's the stability anchor.
That's the idea, their intrinsic value anchor. And what's interesting, reading through this, is that the EVP isn't just promising stability. It sounds like it's designed to actually enforce it.
Enforce it how?
By tying the asset's worth not to market sentiment or the latest tweet, but to actual tangible value streams.
Real world stuff.
Generated through exclusive partnerships they vetted, real businesses, real utility.
Okay, so that's the key analysis then. Yeah. The EVP tries to ground the value, give it a floor based on actual cash flow or use, moving it beyond just speculation.
Exactly. Trying to mitigate that wild volatility you see when things are purely narrative driven, like meme coins, for instance.
Got it. But here's where it gets, kind of intense, reading the details.
The education part.
Yeah. To really get rid of those weak hands, the panic sellers, they're mandating this deep education process.
Structured empowerment, they call it.
Right. The 3-2-1 system. Yeah. 3 hours of coaching, 2 days of training, and then a full 1-week boot camp. Mandatory.
Wow. Okay, that's a serious commitment. A huge barrier to entry, really.
Definitely.
But you can see the logic, right? They clearly see this 3-2-1 system as their ultimate quality filter.
How so?
It ensures anyone who gets through is totally bought in to the long-term vision. They understand why these short-term market swings supposedly don't matter to the protocol's core value.
And they double down on that commitment with these 5 rules of participation.
Yeah. Learn, invest, promote, sell, and prosper.
It's not just investing. It's like a whole behavioral contract. It sort of transforms participants from passive investors into active stakeholders. Legally and culturally, it seems.
That combination could be pretty powerful, requiring people to actively promote the mission, to really learn it before they can even fully participate.
It builds a different kind of community.
Yeah, one that's maybe contributing to growth rather than just sitting there waiting for the price to pump.
So, okay, that's the internal structure. What about their next moves, externally? How do they position this?
It seems like it's all about controlling the narrative. They're really leaning into their ethical foundation.
The SEWA thing?
Yeah, SEWA. It stands for Serving Eternally Without Acknowledgement. This whole idea of collective prosperity, a win-win-win. It's positioned as this powerful, non-financial driver, almost like a shield against cynicism.
Interesting.
And near term, the big push is what they're calling the anti-volatility campaign.
Okay, so directly addressing the chaos.
Directly contrasting their stability, their compliance focus with what just happened, that massive $19 billion liquidation, the crazy meme-driven swings in Bitcoin and Ethereum. They're saying, look, there's another way.
And tied to that, their advice on capital. It's very specific.
Smart dip buying. But notice what that means here.
Right. It's not go leverage up and buy the dip in the broader market.
No. It's advising participants to strategically move capital within their own SEWA ecosystem, positioning inside their presumably more robust structure for that eventual macro rebound they expect.
So the clear takeaway here, for you listening, is that volatility isn't necessarily the enemy.
Right. It can actually be reframed, maybe even used, seen as a necessary reset.
Yep.
But only if a protocol has built-in ways to decouple its core value from pure speculation.
And ways to enforce deep, real conviction among its users. Like that intense education process.
Exactly. Which brings us to a final thought, maybe something for you to chew on.
Okay.
This entire strategy, the ethical framing, the compliance focus, the stability, It's explicitly designed, they say, to attract serious players, high net worth individuals, institutional capital.
Makes sense. That's often the goal.
But here's the question. Can a strategy that relies so heavily on mandatory, quite intense community education, that whole 3-2-1 system bootcamp thing, can that really be the main proof point convincing enough for, major institutional trust? It's an interesting angle.
PALG's Daily Insightful Analysis. 251,021. As the world's top team of experts, strategists, and advisors, we have completed our expansion on PALG's insightful analysis and have formulated a decisive strategic roadmap. PALG's report correctly identifies the current crypto environment as one of contradictory volatility, a bullish macroeconomic undercurrent, Fed rate cuts, US-China deal progress, repo stabilization is being overridden by extreme short-term liquidity shocks and narrative-driven sell-offs, Trump-China crash, $19.5 billion liquidation. The key takeaway is that these events are not a collapse, but a reset that clears out weak hands and leverage, validating the necessity of a non-speculative, conviction-driven strategy. Our advisory team concludes that the future of money SEWA, Cryptocurrencies Assets tfomSEWAca, is not just a viable path forward, but the strategic imperative that transforms the current market opportunity from a high-risk trade into a sustainable, collective prosperity model. Strategic justification. Why tfomSEWAca is the right way forward. The tfomSEWAca protocol is the definitive answer to the systemic flaws PALG's report highlights in the general crypto market: excessive volatility, dependency on unpredictable narratives, and the flushing out of weak hands. The protocol's structure ensures value is built on conviction, not speculation. 1. Decoupling from speculative volatility. PALG's analysis underscores the danger of a market that moves billions based on a single tweet or a sudden liquidity crunch, leading to the biggest liquidation in history. The tfomSEWAca protocol fundamentally addresses this instability. Non-speculative foundation. The protocol explicitly avoids volatile speculative trading and focuses on strategic growth mechanisms designed for long-term stability. Intrinsic value anchor. Unlike tokens driven by hype, SEWA cryptocurrencies assets are intrinsically linked to a proprietary, eternal value protocol (EVP). This EVP ensures their worth is tied to tangible value streams and exclusive, carefully vetted partnerships, providing a fundamental basis that exists far beyond unpredictable market speculation. Mitigated risk. The tfomSEWAca ecosystem incorporates robust mechanisms that actively promote stability and significantly mitigate the volatility often associated with standard cryptocurrencies. 2. Cultivating conviction and eliminating weak hands. The report notes that market crashes are a reset that tests investor conviction. The tfomSEWAca protocol is structurally designed to only onboard and retain participants with true conviction, replacing weak hands with a highly educated, engaged community. Structured empowerment. The 3-2-1 system, the 3 hours coaching, 2 days training, and 1 week bootcamp serve as a mandatory filter and educational pathway. This intensive process builds crystal clear understanding and confidence, ensuring every participant is equipped with the knowledge to navigate market noise and adhere to the long-term vision, which is the exact opposite of the confused, panicking traders who got wrecked in the crash. Active and committed participation. The 5 rules of participation: learn, invest, promote, sell, prosper, mandate a commitment that solidifies the participant base. An initial investment acts as personal seed capital, transforming participants into committed stakeholders whose active promotion and selling directly contribute to the collective growth and strength of the community. 3. The ethical and collective advantage. The SEWA ethos. Serving eternally without acknowledgement, SEWA provides a foundational narrative that transcends pure profit and positions the protocol for long-term societal relevance. The ultimate goal is collective prosperity, win-win-win, which acts as a powerful, non-financial incentive for community cohesion and growth, a vital factor missing from traditional, zero-sum financial markets. The next strategic moves. Based on the market reset and the unique strengths of the tfomSEWAca protocol, we advise the following immediate and long-term moves. Phase 1. Internal fortification and leverage. Immediate. Mandatory 3-2-1 system scale up. Immediately prioritize the enrollment of all new and existing key stakeholders into the full 3-2-1 system. This action converts capital holders into evangelists of conviction, making the community impervious to the short-term sentiment flips described in the report. Asterisk EVP reinforcement focus. Double down on securing and publicizing the tangible value streams and exclusive partnerships that underpin the eternal value protocol. This is the most crucial step in further decoupling the SEWA assets value from the general crypto market's unpredictable price action. Capital repositioning strategy. Smart dip buying. Instruct participants on the strategic flexibility to reposition their capital, as illustrated in the white paper's financial progression example. This involves intelligently retaining capital within the robust SEWA ecosystem for continued exponential growth during the macro bullish rebound, rather than engaging in high-leverage spot trading that PALG warns against. Phase 2. External narrative control. Near term. Launch the anti-volatility campaign. Frame the next marketing push around the core message: volatility is the past. Stability is the future of money. Directly contrast the ethical, non-speculative, and stability-focused nature of tfomSEWAca with the $19 billion liquidation and meme-driven price swings of Bitcoin and Ethereum. Targeted outreach for institutional conviction. Leverage the ethical, legal, and compliance-focused foundation of the protocol to attract institutional and high-net-worth capital seeking a low volatility, high conviction, and ethically governed asset class within the digital economy. Repurpose the viral post ideas. Utilize the set of high-impact content hooks to drive adoption, focusing specifically on Hook 2 and 4. Break down why the latest $19 billion crash went viral and how the tfomSEWAca community avoided it, demonstrating how to repeat a stable, conviction-driven outcome. Hook 7. Repurpose PALG's report as a reel with a new hook. Why the macro is bullish AF, but the market is a lie, and the protocol that fixed it. These moves ensure that the tfomSEWAca protocol capitalizes on the market reset by proving its resilience and superior long-term strategy, solidifying its position as the future of money.